This is my entire trading strategy, the same strategy that helped me quit my 9 to 5 and make consistent money in the market. And today, I'm going to walk you through this strategy step by step, starting from zero and building all the way up so you can see exactly how it works and how you can apply it yourself. You don't need indicators, you don't even need a daily bias. That's how easy it is. All it focuses on is just a few key things: the 1 minute time frame, liquidity, inducements, and a high probability scalping trade. And in this video, I want to show you how repeatable and simple this setup is. Alright, let's get straight into this. Now this strategy is divided into 3 steps. Now these 3 steps are basically 3 questions. The famous 3 W's that I keep mentioning in most of the videos. Basically, which will help us understand the direction of the market, the bias, whether you should be buying or selling for the session you're trading. Now the 3 W's are basically: where is the price coming from? Where is the price right now? And where can the price potentially deliver? And this is understood through reading the price action that is on the higher and the middle time frame, right? And these obviously have some subcategories that we're going to look into. And by the end of the video, I'm going to make sure that you understand how to utilize this playbook to take trades. Now the first W, where is the price coming from? And the first part of it is basically understanding the trend, the range you're dealing with. Now when we glance at the price action on a high time frame, we can see that it is a bearish market, a bearish trend, right? A sequence of basically lower highs and lower lows. You have a lower low, a lower high, a lower low, a potential lower high that can lead to a lower low. We don't know that yet. We're just, reacting to whatever the price is giving right now, okay? Now, these 2 structural points are internal. Why is that? Because that was the break of structure that was needed for us to identify that the market that was going bullish is now ready to go bearish, right? So the 2 points that are relevant in terms of trend, in terms of the range, is this swing high and this swing low. So we're going to mark it as a high here, and then we have a low here. Now, once I've done that, right, once I've marked the high and low, and once I've identified the range, I can zoom into this area, right? Anything above this line, anything below this line, it's not important. Not interested in it because it's not going to affect the price action inside the range, the price action that I'm actually dealing with to take a trade within my session. So that's your range, that's the trend part done. The second part of it is your point of interest, the supply or demand zone, plus the control supply or demand zone. Now, supply zone, right, very obvious. We're going to mark this as our extreme supply zone right there. Now, we know that this supply zone is quite a good one as well because we had a trend line liquidity here. It also tapped into a daily imbalance right there. And then we can see that, price is actually starting to deliver bearish, right? Now, that is an important zone as a supply zone, right? Then we're going to mark the area that was responsible for the break of structure. Right, we can see that we had a bit of a retracement here, right? It retraces a little bit before the final break of structure. So we know that this area over here was responsible for that break. That's the last retracement before the break. So that area becomes an area to focus on, and we call this basically a control zone. So these are the 2 points that are basically responsible for doing something within the price. So that is basically what we're going to mark right now. Now, that's your first part done, trend done, point of interest identified. Now we're going to drop down to H4 to look at inducements and who is in control, right? Whether it's the buyers or the sellers who are in control of the market. Now, when I drop down to H4 time frame, right, I'm only going to focus on the price action within this range, okay? The range that we have basically identified from the daily time frame, right? And we're going to look at the inducements, right? We're going to break down the price action and look at what sort of liquidity it induced to push the price to the downside. Because we know it's not one straight line, right? Let's break it down. So we had relatively equal highs, which actually got induced by this candle here, break of structure given, mitigation into the imbalance, and then prices pushed further down, right? That's good. That shows sellers are in control. Further, we had more liquidity, inducement of that liquidity, and then prices pushed further down to create that break of structure that we marked from the daily time frame. So that high, right, basically led to a push out to take the previous low, right? So this high is actually responsible for taking the previous low to form a new low within the market. So we know we are in a bearish market because we're having inducements leading to more lower lows being formed. Now, when we're focusing on the swing high, it is also important that we look at what the swing low induced, right? Because it's not always, again, we're not always going to be delivering in this fashion. We're going to have pullbacks, we're going to have retracements, and we need to understand that through what sort of liquidity this low here induced to understand what kind of pullback we can expect, right? So this low here, what did it do? It induced this swing point, and then it pushed the price higher into the control zone. So right now, price action is actually sitting within the control zone. Now, the goal might be to create a new lower low. We don't know that for sure yet, right? So we are dealing with the phase of retracement, the pullback phase, okay? Now, that's your first part done, right? Trend done, point of interest addressed, inducements, right, of your swing high and low. So basically the range that you have marked, understanding what sort of liquidity it induced, that part is done. Now we're going to move on to price delivery, right, to understand whether price is efficient or inefficient. Price delivery is something very important to consider, but people often overlook it, right? I don't see a lot of people actually paying attention to this. And this is something that is actually a very, very important part of the whole plan, right? So now, first, let me explain for the people that don't know what I'm talking about when I say price delivery. When I say price delivery, what I mean by that is, let's say in a bearish market, you have lower highs, lower lows forming, right? So you had a lower high, lower low, you had another lower high, lower low, a potential lower low again, okay? Now, what you want to see in a good price delivery is basically this lower high aligned with the previous lower low, okay? You want this lower high to be touching the previous lower low, either touching it, or even if, let's say, it just manipulates it a bit, goes deeper into the range, that's totally fine as well, right? So the bare minimum you want is basically the alignment of these structures. So lower high aligned with the lower low, and the second part of it, what you want is basically a break of structure, right? So these two things need to happen for you to say that price action is actually efficient. Price delivery is good, okay? So that's a bearish scenario. In a bullish scenario, you would have something like this. So price creating higher highs and higher lows, right? So you had a higher high, higher low, another higher high, higher low, and potentially a new higher high, okay? Now, in this case, what you want to see? You want to see this higher low aligned with the previous higher high, okay? Now, again, it could be aligned, it could be, further deeper into the range, that's totally fine. We don't care about that. As long as it's touching the line, it's touching the zone, that's what we care about, okay? And the second part of it, which is basically the break of structure. These are the two things that you want to see for you to say the price action is efficient, okay? Now, again, price delivery, whether it's efficient or not, we're going to look at it from both the points, the swing high and the swing low. Okay, because if, for example, let's say from this high, when we analyze it, we see that price action is not delivering good, which means the price action is not efficient. The lower highs are not aligned with the lower lows all the way down to when it created a new point, the new swing low, right? If that's the case, that means that the price delivery is bad. If price delivery is bad, there's a good chance the price, instead of just, making a minor pullback to create a new low, you can actually keep on delivering higher to correct itself, okay? Price will always seek efficiencies. You need to remember this, okay? Price will always seek efficiencies. If it's not seeking it right away, meaning that some cases, you have where price is actually delivering inefficiently, okay? And then later on, it starts delivering efficiently and then goes higher. This is the point, where price is actually eventually going to fill in that gap. It's going to happen, okay? Whether it happens right away or in a bit of time, that's totally up to the market. That's totally up for the price to do it or not. But it is going to fill it in, okay? So what I want to see, if I want the price to create a new low, which basically means if I want the price to do something like this, I want to see good price delivery from this swing high. So let's actually dive into it a bit deeper, okay? Try to see if price is actually delivering good. Now, in this case here, right, we had a lower low, a lower high. This lower high never touched the previous lower low. What that basically means is price action is inefficient. Inefficient price action, all right, IPA. Price goes on to deliver new lower low. This lower high comes up and actually makes the price action efficient by touching this previous lower low, right? So this is good. This is EPA right there. Then what happens? Price delivers further down to the downside, right, giving you the break of structure, goes down, comes up, retest this level. So this lower high is retesting lower low, which basically means that price action is efficient again. Excellent. This is really good, right? This is what we want to see basically, right? Then again, final one here, right? Before the final break of structure, price goes down, right? Leaves behind inefficiency, which obviously gets tapped into within the retracement, within the pullback leg. So you had this zone, which is actually efficient right now through the pullback. Now that is basically what the price was doing since the swing high all the way down, right? This is good. This is what we want to see. But again, the job is not done, right? The price delivery part is still not complete. We want to understand, once this liquidity was induced and price started to create that retracement, that pullback, how was the price delivery? Okay, let's dissect that as well. We have inefficient price action right here. So we have IPA. Why is this IPA? Because this higher low never came down to touch this higher high. Okay, so the price action is actually inefficient. However, so after this, price goes up, right? Creates a new higher high, right? And this one actually misses it as well, right? This higher low never came down, or this one here never came down to touch it. So this is IPA as well. So we have an inefficient price action so far from the swing point. Okay, we can also see that it is actually creating a built up liquidity, right? There's a trend line liquidity forming all the way from this point to where the price action is right now. Okay, and this is not a good sign, right? If you're targeting something, right, let's say you're targeting a buy side liquidity or a sell side liquidity, you want to see good price delivery, you want to see efficiencies, you want to see inducements, showing inducements of control towards whatever target you have. Okay, in this case here, all I see is inefficiencies and build up, right? Trend line basically showing me that there's a bit of indecisiveness within the price. It doesn't want to push higher. Now in this case here, right, this leg here being inefficient is good, and I'm going to break that down further when I talk about targets, right? Where can we potentially deliver? I'll break that down further. Okay, now that part is basically understanding price delivery, whether it's efficient or inefficient, right? So we basically answered the first W, which is where is the price coming from? Now what we're going to do is we're going to move on to the second part of the W, which is basically where is the price right now. Okay, now to understand this part of the question, you need to look at supply and demand zones one more time, okay, but in a bit more refined manner. What I mean by that is you want to look at zones where you want the price to tap into before you wait for your confirmation, your lower time frame confirmation, your entry model. Okay, whether you're bullish or bearish, right, you want to mark a zone. That zone could be in a form of a supply or a demand, could be in a form of a control supply or control demand, right? Could also be in a form of efficiency level. We've already established that price delivery, right, which contains efficiencies and inefficiencies, is an integral part of the plan, right? So what we're going to do right now is we're going to refine the point of interest, although in this case, it might not be really necessary because we're already very close to the high time frame control supply zone. Now, we're not going to mark any zones in this case here. We're not going to refine any supply zone here. Why is that? Is because price is already really close to the control supply zone coming from the high time frame. So it's very, very much still relevant. Now, in terms of efficiency levels, right, what you want to see is, let's say if you are bearish, right, we're targeting something to the downside. You obviously want the price action to be delivering good. Once it's tapped into the control zone, right, which is acting as your point of interest. Now we're going to look at the inducements part. So basically, right, price was creating higher highs, higher lows. Then we had the price actually coming down, giving us a bearish break of structure right here. So you had a bearish break of structure at this point here. This is just to understand who's in control, right? Whether the buyers or the sellers are in control. And obviously you can see control through a break of structure as well. In this case, if the price action was delivering bullish, but then had a bearish break of structure, it basically means the sellers might be getting in control. Now, after that, right, after the break of structure was given, we had a trendline liquidity right here as well. Okay, so this was a trendline liquidity which basically got induced by this structural point here. Again, inside there here as well, we had relatively equal highs, all got induced. Internal break of structure is given, price is potentially again creating a new low. Okay, now this is basically showing me the sellers are aggressive, right? They are more in control compared to the buyers. There's inducements happening, and then there's relative break of structures being given as well. Okay, this is good. This is good because it shows that price can deliver bearish, right? Now that is the second part of W. Where is the price right now? This is still pre-New York, okay? New York session is not started yet. We still need to identify where we can potentially deliver. Now we know that the high time frame is bearish, right? The trend is bearish. We know that we are in a pullback phase right now, retracement phase, which tapped into a control zone. Once price is tapped into the control zone, price is basically showing us inducements, right? It's showing inducements of controls in favor of sellers, right? Because it's inducing the high, creating new low, further inducing highs, creating lows, right? So price wants to deliver bearish. That's the second part. Thirdly, when we looked at the price delivery on the higher time frame, we identified, right, that price is not delivering good, right? Price is creating inefficiencies, it's creating trendline liquidity, which basically identifies, means that price does not have enough fuel in the market, right, to push higher into the extreme part. So when I'm seeing that, right, when I see that price action was inefficient from the swing low, when I see that the buyers are actually struggling to create new highs in our point of interest, there's inducements that's happening in favor of sellers, right? When I see that, I know that price can potentially deliver to the downside. Okay, now right away, I'm not going to be saying, it's going to create a new low right away, because obviously when I look at the range, that's 100 and almost 150 pip range. Okay, that's sort of a move that might take more than even 2 days to happen. Okay, if that's the case, I'm going to obviously find something internally to target. Okay, it could be this trend line, it could be this inefficiencies, it could be a session high low, previous day high low. There's a lot of potential targets the price can deliver towards. Okay, so when I say where can the price potentially deliver, it could be in liquidity, could be an external liquidity, internal liquidity, could be efficiency levels, which is obviously these IPAs, right? Or could be this trend line, right? There's a lot of points that the price can deliver towards. So where can the price potentially deliver? What is the realistic roadmap? Okay, if we've already arrived into a zone, which is one of the point of interest, right? This control supply zone is one of the point of interest, because remember when I said where is the price right now, you need to understand where the price is in a zone for you to start looking for a lower time frame confirmation. Okay, in this case, when price has already arrived into a control supply zone, we know that's a good thing, right? It could be either that price delivers lower to create a new low right away, because overall goal, if you remember what we identified on the higher time frame, that the overall trend is bearish, right? We are in a pullback phase right now. Okay, so we can actually expect the price to deliver lower, to push the price to the downside, to create a new lower low. Or it could be that temporarily the price actually pushes higher all the way towards the extreme supply zone. That could be the case as well, right? But one thing that helps me understand, right, where the price is actually ready to deliver all the way to the upside, which is basically towards this extreme supply zone, or where the price is potentially ready to deliver and create a new low, is the price delivery. Okay, now we identified when we were looking on the higher time frame, the price delivery from this swing point is not good. Why is it not good? Because it's leaving behind inefficiencies, okay? It's leaving behind trendline liquidity, consolidation. There's this entire range basically is your consolidation. There's a lot of accumulation here. Basically, buyers are struggling to push the price higher in a more convincing manner, okay? If that's the case, that basically acts as a confluence, right? It shows me that, buyers are slowing down, right? There's not enough steam, enough fuel within the price to actually get pushed higher, right? Another thing that we looked at was inducements, okay? We saw the price was creating higher highs and higher lows, okay? Then we had the price actually coming down, giving us the bearish break of structure. Price goes up, right? Whatever is happening here, it doesn't concern me. Why? It's because it's out of my trading window. I'm not going to be looking at this at all. However, I'm going to utilize the information that is given here to see who's in control, whether it's the buyers or the sellers, right? So price goes higher. It sweeps this trendline liquidity, it sweeps these relatively equal highs, and then it's giving me internal break of structure to create more lower highs and lower lows internally. Okay, and what that basically means is the sellers are getting back in control. Okay, it is happening within our zone, within our point of interest. We see the price delivery from the low is not good. It does not have enough fuel for the price to get pushed higher. That's the second point. Seeing the inducements, who's in control? Inducement in control is in favor of sellers. That's good as well. So looking at that, looking at all these factors, I know price has a good reason for it to deliver lower. So either way, we know we are going down to form the external low, right? To take out the previous low. It just depends, right? Is this liquidity at the top enticing enough? Or is the liquidity at the low enticing enough to understand control? And then knowing, are we going for this one here at the top or the one to the downside to create a new lower low? Okay, now so far what we've done, just a quick recap. We've established where is the price coming from. We know where is the price right now. And we know where can the price potentially deliver. Okay, now we're on the lower time frame, M1 time frame, and all M1 time frame is going to do is basically refine whatever you're seeing on the higher time frame and the middle time frame. It's not going to automatically create a different narrative altogether. Okay, so utilize M1 or your entry time frame as something that basically is giving you an extra confirmation towards whatever direction you've established using your higher and the middle time frame. Okay, now on the lower time frame, so we're done with 3Ws here. Now we're focusing on this part here. Okay, for the lower time frame read, what you're going to look at is basically the price delivery. Why I'm talking about price delivery again is basically this was our zone to sell from, right? This was a high time frame zone the price tapped into for us to sell from. Now again, if the price delivery, once it's tapped into this zone till where the price is at the moment, has been bad, meaning that it has been inefficient, it's been creating trendline liquidity, accumulation, that basically again shows me the M1 is not convincingly showing me the seller's control. Okay, so it might be that price actually goes higher, right? Corrects the price delivery, takes out the trendline liquidity, taps into the efficiency, and then goes lower. That could be the case as well, right? But when I'm looking at the price here, it's delivering pretty okay, right? It's delivering efficiently, it's been doing good, and all we gotta do now is wait for our window to start, right? And then wait for a confirmation. We need to have an entry model being presented, because without an entry model, even if the price starts to melt, I'm not entering, okay? And so that's it, right? So we have price delivery, we have lower time frame confirmation. The time part is just about to be ticked off because this is just the start of New York, right? Now on M1 time frame, right? What can we potentially deliver, right? For the time part, New York is just about to start, so we can take that part off as well, right? Now we know that New York Open has the tendency of actually manipulating, right? New York Open manipulates, London Open does the same. So that manipulation can happen. How would we know whether it's going to definitely happen or is the price ready to, melt from here? Is looking at how the price was right before this, right? We know that it created a trendline liquidity right here. Okay. We also is the price efficient? Is this lower high touching the lower low? Yeah, it looks like it's tapped into it. Okay, this zone here is quite a good zone, okay, because we had some relatively equal highs that got induced. So if I had to mark a zone within M1 as well, I can do that by marking this here as my supply zone that I would want the price to basically tap into, right? Take this trend line, tap into this. Doesn't necessarily have to do it, but if it does, that's even, it's a bonus thing, okay? Now, all we're going to do is we're going to wait for New York to start, take this trend line liquidity, maybe tap into the supply zone, give us some sort of confirmation, and then we're going to target some sort of objective to the downside. Again, there's a lot of objectives, right? I personally have been sticking to 1 to 3, so I might just take that approach and I'm all out of the trade. Obviously have break even set. Now what we're going to do is we're going to play the price and see what the price does once this trend line is taken, and if the price taps into this supply zone on M1, and then wait for a lower time frame confirmation. Okay, so let's play the price. That's the start of New York. Trend line taken. This is great. Okay, but I don't see a confirmation yet. Let's see, price goes higher or just dumps from here. Okay, right. Taps into this supply zone. This is good. This is really, really good. This is what we wanted to see. Okay, trend line taken, taps into the M1 supply zone. Now, if a confirmation is given to me, this is the one that I would, ideally want to take. This seems like the New York Open manipulation part is done as well. The entry model is given to me. I'm going to be more than happy to take that. All right, now here, right, what I can see is basically two-leg protocol. Now, what that basically is in a two-leg protocol, right? Once your higher time frame, your middle time frame is aligned, you have had inducements, you've had the New York Open inducements, price has tapped into your point of interest, okay? When all of that is ticked off, okay, and then within your point of interest, price does something like this. It creates a bearish leg, gives you a bit of a pullback, and creates a second bearish leg, okay? The second bearish leg is obviously confirmed by a break of structure here, okay? So you have one leg, retracement, second leg confirmed with the break of structure. If the price gives you that is a two-leg protocol, or obviously if it's given on the lower time frame, the entry time frame becomes entry model, right? So that is in a bearish scenario. In a bullish scenario, it's the same. You will have one bullish leg, retracement, second bullish leg. All you gotta wait for is obviously the break of structure. Once that break of structure is given, that second leg is confirmed, and you can enter via the break of structure, or you wait for a bit of a pullback into, a mitigation into a imbalanced fair value gap, and then you can enter. Okay. Now in this case here, right, what has happened is we've obviously had a bearish two-leg protocol. Okay, that's what we wanted to see. So we had a low, we had a high, so the pullback, okay, and then we had the low, right, and the break of structure was basically at this point here. That's your boss right there, right? Now, I could either, right, enter right at the breakout structure, okay, or, wait for the price to give me a bit of a pullback, okay. Now, just to understand whether the price is going to go further down or is going to go up, we're just going to put a position here, okay. This one right here, let's say we entered via the breakout structure. Your stop loss is going to be the high. The high, basically the reversal point, that's going to be your stop loss, right? And then again, I'm going to target only 1 to 3 because because I've been sticking to a mechanical approach and it's been working really, really well. So 1 to 3 is all I need, right? 1 to 3 right there. Obviously, we need a break-even point as well. That comes within trade management, okay? Now with break-even, I can put at any of these liquidity points, okay, or I can have a mechanical approach again, right? I can see where the price is giving me at least 1 to 2, right? 1 to 2 right around here. This here would be my break-even point, which basically means I'm going to move my stop loss to entry once price taps into this, right? I don't take partials. I know some people do, right? But for my plan, my trading plan does not have any partials taken off at the break even. All I do is just move my stop loss to entry and then all out at 1 to 3, okay? Now I'm going to play the price and see what it does, right? Let's go. Obviously, goes down, makes a pullback. This is really good as well. This pullback is really good, which basically means price is creating efficiencies on the way down, which is what you want to see when you're in a trade as well. You want to see EPAs, efficient price action, all the way down. Okay, now once price tapped into this price point, I moved my stop loss to entry. It became a risk-free trade. Now after that, if price just reversed and went higher, it'll still be a break-even trade. I'm not losing any money, okay? So it's a risk-free trade. Now we're just going to play the price and see if it actually hits my target. Right there, right? So that there is my 1 to 3 done. Okay, 1 2 3. Right there, 1 to 3 GU trade during New York session. Okay, 1 to 3 with 1% risk on any capital. To be honest, 10k as well. It can give you a really good reward if you're consistent, you're disciplined, you're following your plan, and it has good return on investment. Now, if you want to actually learn how to execute this, not just understand it, this is exactly what I do inside my mentorship. I work one-on-one. We trade live, break down your executions, build discipline around one model instead of strategy hopping. You're not left alone with information. You get structure, accountability, and real-time feedback. If that's something you're serious about, there's a link in the description and you can book your one-on-one call with me. This isn't for everyone, but if you're ready, apply. All right, now let's look at what the price can be doing the next day, okay? And we're going to do that by answering the 3 W's all over again, okay? Now, in terms of trend, okay, in terms of the range, we're still bearish, okay? Why are we still bearish? Because the price hasn't created a new low. It's not broken past this low here to form a new low, right? So we're still in that range right now, okay? If that's the case, this right here might just be a pullback, okay? What did it do? So that's the range, right? That's the basically what we're dealing with in terms of trend. We're still bearish, okay? Now in terms of a point of interest, okay? In terms of point of interest, we have a demand zone here, okay? This is a demand zone right here. Why this one here and I've not marked the one at the extreme point? Because this one here actually had inducement of this low here, right? So it came down, induced this higher low, and then went up to create a new high, okay? So this is an important demand zone, okay? If I'm bullish, I do expect this demand zone to actually hold. Now, in terms of our supply or control supply zone, I see this structural point as our control supply zone. Now, why is that our control supply zone? Is because that's the lowest point before the price started to create higher highs and higher lows, right? So you had a low here. After that, price started to create higher highs, higher lows. Buyers were in control for a bit, and then price reversed and finally gave you a break of structure at this point to create a new low, okay? Now, this low was the final push to make this break of structure happen was through this structural point here, this retracement point here, right? So that becomes a control zone, right? Price from this point here again, right? So that is basically looking at the trend, looking at the point of interest, looking at inducements, right? That's very important to look at. Now, looking at inducements here, okay, we had inducement of this low, which we've already established, and the price gave us a bearish break of structure by breaking this high here. Price then started to consolidate a bit, but it hasn't managed to break past this low. You know, if let's say the sellers were in control, okay? So it's still ranging in between this. Now, that is in terms of inducements, right? I don't see sellers really like, aggressively in control. I don't see any break of structures happening, okay? It's all internal. So buyers are still in control, in my opinion, okay? Talking about the last point, which is basically price delivery, efficient and inefficient, I can see price action is delivering actually pretty good, right? We had a higher high, higher low, higher high, higher low, aligned with the previous higher high, goes higher, comes down, sweeps it, and then gives you a break of structure, right? So the price is actually delivering pretty good, right? From this low all the way up is pretty good for the bullish scenario. Now, where is the price right now? Right now, the price is within the demand zone. Again, like I said, if I'm bullish, I don't want this low to be broken because price is already delivering really good. It doesn't have a reason to go down and then deliver higher, right? So we can expect the price to actually respect this demand zone and push the price higher. Okay, so that's your basically demand zone. Then in inducements, right? So if we have to see, we have internal, liquidity being induced here as well. That's your built up taken, right? And then internally, higher highs, higher lows forming, right? Higher high, higher low forming within that. Now, in terms of where can the price deliver, right? We do, in terms of that, ideally would want the price to tap into this control zone and then give me some sort of, expansion trades to form a new low. But if I were to be a bit more passive with my objectives, I can obviously, I have this point here, right? Which is basically a trap right there. So I have a trap right here. Okay, so that becomes trap, and it's also right above Asia high as well, so it's perfect. So that becomes a trap. If I were to target, right, if I'm not taking the mechanical approach of 1 to 3, I can actually target this trap right here and then eventually target this control supply zone. What we're going to wait now for the price to do is basically give us some sort of lower time frame confirmation when the time is right. So London is just about to start. All we got to do is wait for a entry model and then we look for some sort of buys. Okay, I don't see anything right now. Potentially 2-leg again, but the stop loss is massive, right? So I don't like that. Okay, so what did the price do? Created higher highs, higher lows. This came down, swept liquidity of this low here, right? And then is giving us a break of structure, showing us bullish intent again. So once price swept this low and gave us a break of structure, we could have entered right there. Okay, so if I were to enter at where the price is sitting right now, let's say at this point here, stop loss at this low, the candle that actually induced this higher low, and then let's say I'm targeting the trap, right? I'm gonna have a bit more of a bigger target. Let's say I am targeting the entire trap. Okay. Now obviously we need a break-even point. Okay, so the break-even point we could be the closest liquidity. We mark it somewhere around here. That becomes our break-even point. Okay, now let's play the price and see what it does. Alright, we had a bit of a deeper pullback. Okay, perfect. Okay, now at this point here, once price taps into my break even, I would move my stop loss to entry. Now, because I am targeting a bigger risk to reward, it's 1 to 6.09, I would, advise to take some partials off, okay? Takes 25 or 50% or whatever percentage you're comfortable with. Take it off as soon as price hits this break even. So even if the price reverses, first, it's a risk-free trade. You're not losing anything, and you've taken some partials off. So you actually bagged something. So now let's see once it takes the trap right there, right? That there is easy, right? That there is your 1 to 6.09. This is what it is, right? Every single time I sit down to trade, I have this checklist, and now at this point I've actually memorized it, so I don't have it right in front of me. But these are the steps I follow to get the direction, get the bias all the way down to lower time frame, and then get into a trade. Okay, what I would advise is take this checklist, right? Back test, practice, right? And then apply it in the markets. And I'm pretty sure you're going to see great results. And that's the point I want you to leave with, right? This isn't about finding more setups. It's about taking fewer, better trades only when the conditions are present. Because every strategy, it has drawdowns, right? But discipline is what keeps you profitable through them. Be a restricted trader, trade your window, wait for the inducement, confirm on the lower time frame, manage your risk, and walk away. Do that consistently, and the results take care of themselves. That's it for today, and I'll see you in the next one.